We are back, and you are, in fact, watching The Street, not morning markets. Sorry about that. Not enough coffee this morning. So we start getting the bank earnings next week. We're expecting Scotiabank on a Tuesday. Colin Cieszynski, what are you looking out for from the big lenders?
What I'm really looking at for them is how are things going in the Canadian economy, in the Canadian banking system, because we saw earlier this year we had a crisis in the U.S. banks, and the U.S. banks sold off, and Canadian banks held up relatively well through the first half of the year, especially compared with U.S. banks. But since the summer, it's been this slow drip of quiet, steady distribution in the banks that we've seen.
Sorry, let's put up a 5-year for the TSX Financial Services Index. Carry on. So it's been a kind of a slow misery process?
Yes, and the U.S. banks have bounced a little bit, and Canadian banks have been quietly coming down, and they're meeting in the middle somewhere. And so I think this round of bank earnings is quite significant, because we're starting to see now we could start to see more of the impact of what does higher interest rates mean for the banks, both from a revenue standpoint, but also from what does this mean for credit quality? What does this mean for consumers who have been getting squeezed? And where does where do all those pieces fall out? Especially this is their fiscal year ends as well, so we could see dividend announcements as well. So we'll be keeping an eye on how much are the banks prepared to raise their dividends this quarter, and what does that mean for their outlook for the Canadian economy going forward?
CIBC says that generally earnings estimates for Q4 for the sector have been coming down.
It wouldn't surprise me. There have been some signs of slowing out there. We've talked a lot about it with regards to retailers, and the banks have a finger in every pie and every part of the pie in this economy. So I think they have a pretty good idea usually of what's going on out there across the board.
And the regulators are wary. They've warned the banks about extending these variable mortgage amortization terms for years and years. So they're watching the lending practices at the banks.
Yeah, and with good reason. I mean, Canada has historically been more regulated. There's more oversights, more conservative, and we see that. That helps us, though, in times when we saw back in the spring when the U.S. banks that tend to be more freewheeling get into trouble.
Here's what CIBC says broadly as well. Well, they kick off with Scotiabank, that credit will be top of people's minds, potential loan write-offs. That's interesting. Positive surprises will probably be dismissed, CIBC thinks, but negative surprises could get an outsized share price reaction. So investors are jumping, according to that read, anyway. It's
a possibility. I mean, that's often the case we do see with in times like this, especially when things are slowing and guidance is soft, because that was one thing we saw. One of the themes of the last earnings season in a lot of cases was great earnings, guidance not so good. And so that theme is just kind of continuing into the banks. But the other one I'll be watching for is what happens with capital markets divisions, because we did have that 2-month sell-off in the stock market that pretty much ended bang on the last day of the quarter for the banks. So there is a possibility that we could see some weakness in capital markets results, but recognize that the quarter pretty much ended right at the bottom, and we have had a 3-week bounce since then. That'll
be an interesting timing thing to watch. CIBC, you touched on this, says dividend. We expect most of the banks to announce dividend increases, but they should be lower than normal due to lack of profit growth.
And that's what I think we'd be definitely watching for, is what size of increases do we get, not only relative to historical, but relative to inflation. If inflation's running at 4%, 5%, are the dividend increases keeping up with inflation?
Yeah, CIBC thinks they'll maybe be 1% to 3%, so nothing too exciting. Yeah, I wonder. I mean, we haven't heard about a lot of people losing their homes yet. I mean, the actual mortgage write-offs have not been that high.
No, not yet. And same thing with credit cards. The numbers have stayed down. The one thing that I have found concerning, less in Canada, but more in the States, was that back in March when the banks ran into trouble, the deposits came down and then never really bounced back, which is, so at this point, I tell you, in some ways I'm more concerned about the U.S. banks, but then that also raises the question of that there's a number of the Canadian banks have quite substantial U.S. operations now. So the split between the Canadian banking and U.S. banking could be quite notable and significant, and and of interest to investors.
There was that interesting story this week. Royal Bank has had to put more and more money into that City National Bank, the Hollywood lender that it bought.
Yeah, I mean, and that's something that we'll be watching for. I mean, certainly the different different Canadian banks operate in different regions of the United States. So that'll be something else that where we could see some differentiation as well, depending on which parts of the states are doing better than others.